Hi, welcome. My name is Taylor Chavez. I'm the Assistant Branch Manager for the South Valley location of First Financial Credit Union, and I'm also a Certified Financial Counselor. What I'm here to do today is to speak to you a little bit about credit bureaus and try and help you to maybe better understand them a little bit. What I'm going to do is we're going to go over kind of the basic types of credit bureaus, what's out there, and what goes into your actual credit score. So to give you the best understanding that you might be able to have on your end. So to go ahead and start out, there's a couple names that you may know: Equifax and Experian. Those are the three top credit bureaus that are utilized by lenders out here in the United States. So they're important to know just because every lender is going to be pulling these. In certain instances with mortgages and those things, they might be pulling all three to just get the best picture possible. So another word that you might actually also hear is FICO. FICO stands for Fair Isaac Corporation. And what that is the Fair Isaac Corporation has put together a model that these credit bureaus utilize to come up with a score. Your score that you may have heard, somewhere around 700, 600, actually goes through a different range. So it can go as low as 300 and all the way up to 850, depending on the credit bureau that you're actually utilizing. Each one has its own parameters that they utilize, but they're all on average somewhere around that same area of 300 to 850. So you may get different scores from different ones, but just know that there's a different range when it comes to that. What we're going to go over today is going to be a lot of what actually goes into your FICO score. So you may have a good idea that your payments and those certain types of things affect your credit score, but there's a couple other ones that I want to talk about and really show you how it actually goes into building go up or to help yourself to build that best credit score possible. So to go ahead and start is the first one, which is payment history. It's the one that we always hear about, make your payments on time, and that's good because it makes up 35% of your credit bureau FICO score. So that means that one missed payment that you might have really can drag down your credit score by upwards of 35%. So, and when you're talking within numbers of 10 to 20 points, that can be huge, especially when it comes to saving you money or getting you that actual loan that you need to get. So make sure your payments are made on time, because that makes up the largest chunk. The second one is one that I really want to touch on and really kind of focus on, because that's actually your debt usage ratio. So this gets a little confusing for a lot of people, and that's mainly because, what goes into debt usage ratio? Is it your credit cards? Is it your installment loans? It actually specifically is to lines of credit. That can either be your credit cards or a line of credit from a bank that you might be able to draw from, even a home equity line of credit, or any of these certain types of things. So what that means, and a good tip for this, is that you want to make sure you're keeping your overall credit card balances below 30% of your overall limit. So what does that mean? So what you're going to do is you're going to take all of your credit cards, all of your lines of credit, get those limits, the maximum you can actually utilize with that. Go ahead and add them all up. And then what you're wanting to make sure that when those balances come through and you're reporting that on your actual credit bureaus, getting that actual report coming in for your payment and what it is, you're wanting to make sure that that stays below 30% of that overall credit balance. So credit balance limit. So example here is going to go ahead and be, if I have 3 credit cards, one for $3,000, one for $2,000, and one for $1,500, I'm actually going to have an overall credit limit of $6,500. So that's pretty great. I can do some good things with that. There's a lot of places I can utilize $6,500. But the thing is, when it comes to an actual balance that I'm going to have on there, I'm not going to want to have a balance of anything more than $1,950. And that's because I'm wanting to stay below 30% of my overall credit balance. That'll go ahead and help my score out, because if I'm keeping below that, they know I'm utilizing my actual credit cards and lines of credit in a responsible manner. But it's always deceiving when you have that credit limit. So if you have those credit cards at those high balances and those certain types of things, it can be negatively affecting your credit score by up to 30%. It's something that's not touched on a lot, and it's something that I really want to make sure that you all know out there. Make sure to keep those credit card balances low. Do what you can, get those installment loans to consolidate it over. Do what you can, because that's going to really help to boost your score, or potentially help you to show that you have a more responsible history with your credit bureaus. Next, the next largest one is going to be the length of credit history. That makes up 15%. So not as big, it's about a half as much as the larger portions of your credit bureau, but still is out there. This one is pretty much as it seems, so it's just going to go ahead and show that how much history you have with borrowing funds from banks, credit unions, or lenders alike. So you want to make sure that you're actually showing these payments as long as possible. And that's where great things like credit cards, lines of credit, and those things come in, because what you're able to do is you're actually able to put more of those payments on the books, which gives you a longer history. So you're really able to show that you're making those payments month after month, and really able to show that you're utilizing these responsibly, and it'll really help to boost your score. And those things, if you get a lot of installment loans and those certain types of things, you may go through a good patch. You don't need to pull out any money or anything like that. But the thing is, after a while, all of these things might pop off of your credit, and then you're going to have to start all over again. So really having those credit cards that can have you have those continual payments, those continual minimum payments, will really help you to actually get all set up and really build that length of history. Because when it comes to us doing our risk management, whenever it comes to lending to you, we actually have a really good picture of where you've been, how you handle this credit, and we're able to make sure we're able to lend you the most possible for the longest amount of time. So that's always a great one to go ahead and focus on. Really putting those basic utilities on those credit cards, that gas that you're going to get every week, and paying it off every month. Even if it's something as simple as Netflix that you got to put on there. Go ahead and put it on that credit card so you'll pay it off every month and you'll keep up that credit history. Next is going to go ahead and be new credit. New credit's a strange one for a lot of people, and it's something that only makes up 10% of your actual FICO score, but it's something that you want to make sure you're actually focusing on, because this is something that I see really often as far as that goes. And what that means is how much new credit you're trying to establish. So if you're going out there and you're shopping for those credit cards and you're having about 7 different pulls from 7 different places, it's going to really negatively affect your credit, because it's going to show that you are going to be building a lot of new credit really quickly. And us as lenders, we really don't like to see that. So make sure you're actually keeping that as limited as possible when it comes to getting those credit cards. When you're getting those offers in the mail for credit cards or installment loans or any of those things, make sure you're really choosing what you need. Don't get any new credit that you don't need. If you're getting those offers but you really don't need it, hold off for a time when you might actually need it, because if you have a lot of pulls, it could negatively affect your credit by 10%. 10% may not seem like a lot, but when you're dealing within a ratio of 5 to 10 points that can take you from a tier 2 to a tier 3 type member, then you're actually potentially hurting yourself and not able to actually save as much money as you can. So a good rule of thumb that I usually stick to is about 1, maybe 2 per year at most. And sometimes some years can be difficult. I'm not saying that you can't do it, but in order to really help your credit score out, make sure you're keeping it as limited as possible, because even 1 to 2 a year might be a little too much, and it will start to negatively affect your credit. Another one, which also kind of gets a little bit confusing for people, is types of credit. So what we're looking for whenever you have a credit bureau, and what these credit bureaus are looking for, is how diverse your actual credit profile is. So we're really looking to see, are you getting installment loans? Are you getting credit cards and those certain types of things? But that's because it gives us the best picture possible. We want to actually be able to see the full picture, how you handle different types of credit, and it makes us more comfortable with being able to lend you more and for longer amounts of time. And in the end, will also help you to go ahead and save you some money. So when it comes to type of credit, make sure you're getting those installment loans as well as those lines of credit. You really want to make sure you're diversifying as much as possible. You can take those credit card balances, consolidate it into an installment loan, or you can always just go ahead and keep up with those credit cards even if you've just been sitting on installment loans. So then you can also go ahead and show that you can handle all types of credit when it comes to being lent to. Another type is mortgage, and that's going to sit in its own bracket. But that's going to be one of those longer length loans that you'll actually have that'll help you to go ahead and set up a good setup and give you that payment history. It will also help you with your length of credit history. If you look at mortgage loans, they're typically going to be about 10 to 30 years. So that's going to put a lot on the books for you, which is the good part. So that goes into a lot of the credit score. So just to recap, that's going to be your payment history, makes up 35% of your credit score. Your debt usage ratio, so how much of your credit lines, your credit cards you're actually utilizing in relation to your overall limit, is going to be 30%. Your new credit is going to go ahead and be 10% of your score. So how many things you're actually applying for, how many new credit you're actually going to go ahead and get. Types of credit is going to go ahead and make up 10% as well. That's going to be making sure you're diversifying your credit as much as possible, whether it be installment loans like a car loan or credit cards like a line of credit. This last one is going to go ahead and be length of credit history, and that comes up with 15%. So really just making sure you're keeping those lines of credit going, keeping those minimum payments paid, and making sure all those payments get in, and really being able to show how much you're able to utilize this and for how long you are. It's going to be really good to go ahead and help you to better understand your score, but also understand how to make it a little bit better. Next is something that I want to touch on as far as those credit accounts. I know a lot of you utilize services such as Credit Karma or any of those to really kind of keep track of your score, see where it might be going and all of those things. But here's the thing is, a lot of you might be getting that new credit card or that new installment loan, and you're wondering, how long is it going to take for it to start positively affecting my credit score? You may start checking it right after, kind of see what you're going to do, but all you're really going to see is what's affected via the actual pull. So sometimes it could be negative, and so that might throw you off a little bit. But the thing is, you're actually going to want to go ahead and at least get 6 months worth of payment before you'll actually see anything positively affect your credit bureau from those payments. So 6 months is the rule of thumb when it comes to these things. So whenever you're actually setting up a new account or doing any of those things, make sure you're making at least 6 payments on there. I know a lot of people sometimes may get, installment loans for small amounts, just for emergencies here and there. But you want to make sure you're at least making 6 payments on those things, just so you actually get the benefit of it on your actual credit bureau. Anything below that really won't affect it very much, just because it'll show that it was a short-term loan and that it really wasn't there and didn't give much history. So 6 months before you start seeing that positively affect your credit score. Another common one we also hear is, does my credit score get negatively affected once I pull it myself? And that's where there's a bit of confusion, but the actual answer is no. It does not hurt your credit score to actually be pulling your credit bureaus yourself. You actually legally are able to pull one credit bureau from each of the major credit bureaus per year. So you're able to actually go ahead, get in there, pull your actual credit bureau, check it for its validity, make sure everything's up to date on there, that nothing's being misreported, that you missed a payment or that, you have a line of credit that you maybe didn't know about. So you can actually go into those things and request them once per year. And with that being said, we actually suggest that you pull them at different intervals. So a good rule of thumb would be to pull your TransUnion in January, pull your Equifax in May, and your Experian in September. Then you can make sure you're getting the best picture possible. A lot of these credit bureaus, they'll get the same information. At least they should be. And so what you're doing is you're making sure that everything's reporting correctly on all of these credit bureaus so that nobody's opening up fraudulent accounts in your name. Maybe some of us might have entered your name wrong. The social might be transposed. Even addresses can be incorrect. But you want to make sure none of that's going in and making us worry anything about your credit bureau. So pulling these and checking them is the best way to go ahead and do that and make sure that they are as accurate as possible. The website that you can actually utilize for that is annualcreditreport.com. And what you're going to do is we're going to actually go ahead and link this at the end of the video so you can go ahead and utilize this service to go ahead and pull your credit bureau. What you're going to do with this is you're able to pull it and make sure everything's good. As much as I'd like to say us as lenders are perfect and never make mistakes, we're still human. Sometimes mistakes are entered and they get off to your credit bureaus, but you want to know your rights with these things. So make sure you're getting out there and you're utilizing the tools and resources that you can to go ahead and dispute that. Another website that we're actually going to go ahead and link is going to be where you can learn more about the dispute process and also just learn more about your credit bureau in general. We'll be getting this full link after the video, but it's actually consumerfinance.gov. It's a government agency, of course, but what they do is they answer more questions as far as disputing your credit bureaus, looking for incorrect information, and also they even have pre-filled letters that you can go ahead and utilize to send off to the lenders as well as the credit bureaus themselves to dispute bad information on there. So these are pre-filled, and it makes it nice and easy so that you can just enter the information that you need to be corrected, send them off to the credit bureaus, and those things can get corrected for you. It's really imperative that you do this because that'll make sure that your credit bureau is as clear and concise as possible. So that when it comes time to seeing us, that you're not having to try and dispute it whenever it comes to that actual lender, that you're already disputing it on the back end, and then we'll be able to see it. So that's a great that's a great resource to utilize because it has all the information located in one central location for you. So make sure you know your rights with these things and really getting in and checking those credit bureaus because sometimes they may be off and you want to make sure that they're right. So after that, I want to just kind of go over, how to make sure that you're getting the best credit score possible. So, the tips and tricks that we utilize to make sure that you're actually getting the best credit score and doing everything. So with the knowledge that we have on here, we're going to make sure that, of course, our first tip is to go ahead and pay your loans on time, every time. You really don't want to miss that payment. You really don't want to get away from it or have anything like that because that's going to negatively affect you potentially by 35%. So make sure you're getting those on auto pay, coming in right on time and getting them paid so you're avoiding any hassle like that because we don't want that affecting your credit score. Next is that one that I really focused on a little bit earlier, which is don't get close to that credit limit. You're wanting to make sure you're staying below 30% of your overall credit limit to make sure you're getting the best of your score possible. Sometimes that may, entail having to get that another credit card to bump you up a little bit, but really just making sure you're staying below those balances. 30% of your overall credit limit, if you stay below that, you're going to be keeping an optimum score out there. Next, a long credit history will help your score as well. So make sure you're putting those basic purchases on that credit card, paying it off every month, and really just trying to get it out there that you're, showing those payments and making sure that we can see that length of history because the more history we have, the more willing we are to lend. Next is only apply for credit that you need. That comes down to this new credit. You're making sure that you're not just applying when that new credit card offer comes in, that you're not necessarily just looking for those loans here and there. If you can go without, really try to because that's going to help you down the long run with making sure you're getting the best interest rate possible and at the longest amount of time because it'll show us that you have been responsible with your credit for a long time and that we're able to lend to you without fear of anything going awry with it. So really look into that. And lastly, like I was just going over, fact check your credit reports. Fact checking everything and making sure everything lines up and that it's as good as possible is something that you really should do out there because, like I said, we're not all perfect when it comes to that, but what you want to make sure is that your credit bureau looks perfect because, that's going to be our one way of seeing how well we can lend to you in those things when it comes down the line. So really check those. Make sure you're pulling that credit bureau 3 times a year to go ahead and see that nothing is coming up that isn't yours, payments that might have been made that they might not be reporting, and just make sure you're getting out there and speaking to those lenders. Utilize those resources such as the consumerfinance.gov to get out there, get those pre-filled letters and get that fixed because once it's fixed, then you don't have to worry about it anymore. And you're able to know that when you're going in for that loan, that you're confident that you're going to get it and that there should be no question of, what you can afford and what you can do with that. So really make sure you do those things. Another portion that I'd like to really kind of go over a little bit just on the back end is establishing new credit. This is a question that we get a lot and you really just kind of want to think about how you can go ahead and do that. It can be daunting for a lot of people because the credit world it seems kind of mysterious in some ways, and especially when you're just trying to start out, where do you start? What do you do? The nice part is a lot of banks, as well as us as far as credit unions, establish products that will really go ahead and get you going as far as credit goes. They're usually small, short-term, installment loans, maybe as low as $300 up to about $1,000. But it'll allow you to go ahead and get those payments on the books so that you can start building that credit up. It'll show as an installment loan, so it shows you'll have that history. But remember, make sure you're at least making 6 payments on these things because that's going to go ahead and be once it starts positively affecting your credit score. Maybe tempting to pay it off a little bit early or something like that, but in these beginning stages when you have the time and the effort, you can really get those on the books and make sure that you're actually getting those payments working towards you in the future. Because as you build up, you can go ahead and start and get that credit started. Maybe start with an installment loan, work your way up to a credit card, and then kind of keep going up until you might work your way up to a mortgage. That's what I myself did. I started at 18, just got started with the process, and eventually worked my way up and eventually into buying my own house. So make sure you're looking into those things, because it's never too young to start. Unless you're below 18, then it's a little too young. But once you're at 18, then you can start getting at that and making sure you're building those credit. But also, it's never too late to start. Go ahead and visit any of us and make sure that you're getting those processes in, seeing if you can get those applications to start building that credit to be as great as possible when it comes to that. The more history, the better, of course, like one of our other tips. So, just to recap, we went over quite a bit as far as credit bureaus go, what goes into them, a couple tips and tricks in those things. And next, we have a couple questions for you that we're going to go into, and that you can go ahead and respond in the comments below. So the first one that we're going to go ahead and ask you all out there is going to be, where can you request your credit bureau copy online? So this goes out to everybody. We talked on it a little bit earlier. So go ahead and post it on the actual feed below, and then we'll go ahead and get out to you about that one. So, and we have a couple things that we can go ahead and send on out for, of course, whoever gets it and gets the correct answer. So that's the first one. And then lastly, we wanted to go ahead and propose to you, if you have any questions about what we talked about or what we covered today, go ahead and put it in the feed below, and we'll make sure to get responses out to everybody, because we want to make sure you're best understanding your credit bureaus out there and really kind of doing the best that you can. Also, another resource, you can come out to any one of our Albuquerque locations and talk to us certified financial counselors. We're here for you, and we want to make sure we're helping you out in any way possible. And much like our other Facebook Live feeds, we can talk about all forms of credit, as well as budgeting, as well as cash flow, and all of those certain types of things. We've done a couple videos so far, and we're going to keep doing a couple in the next couple weeks. So make sure to keep an eye out for them and see what you can do. But always feel free to come visit me down in the South Valley location. Visit any of us at any of the other locations. We have various certified financial counselors on hand, ready to help you out with everything that we can. So really make sure you get on out to us and get those questions out, and we'll make sure to get you taken care of. Thank you for your time, and you have yourself a great day.